Hello, everyone. Thank you for joining us today and welcome to this educational presentation. Today, I have a really great presentation because we're going to be talking about statistics. And if you followed me for any while, you know that I really don't believe in statistics. In fact, I've said in the past that I have used statistics and they've all pretty much blown up. None of them have lived up to their potential or to their back testing. But there actually is one statistic. In fact, this is the only statistic that I actually ever look at. So let's get right into it. And now let me tell you what this statistic is. The facts are that 80% of all traders will lose money. And when I say lose money, we don't mean that you're going to go into a series of losses or have a bad slump or a drawdown. Basically means that you'll lose everything that you've set aside for your trading. The facts also state that 15% of all traders will break even. Okay. So that means that you basically won't lose anything, but you won't have anything to show for all of your hard work, time, and effort, most especially the money you've put in. It'll just basically be treading water. And lastly, the statistic states that 5%, that means only 5% of all traders are consistently profitable. Now, we have a good crowd here today. We have nearly 100 people. Let's say out of all the people attending today, all the attendees, only 5 of you will be consistently profitable. Now, this is a tremendous statistic that it's been right ever since I started trading. That was 40 years ago, and it never fails. So if you want to see what that looks like on a pie chart, that red portion, that large red portion, represents the traders that will ultimately fail, that 80 percentile. That blue slice there in the middle represents the percentage of traders that will ultimately break even, and that small green sliver represents the percentage of traders that will be profitable. So you have to ask yourself, how is it possible that the majority of all trading profits are captured by such a small percentage of traders? Now, I truly believe, after trading for nearly 4 decades, that there are an infinite amount of profits to be made each and every day. All right. It's a never-ending source of profits to be made in the market. So why is it that only a small percentage, 5% of all traders, are able to consistently capture them? Well, it actually is more simple than you may think, because these traders know the importance of being in sync with the market. I know you all think that you're in sync with the market. Most of you say, well, Steve, I know I'm supposed to be in sync with the market. I've taken classes and I have studied and I know what Trading 101 is. And so let's share with you what most traders view as a simple analysis of being in sync with the market. As we look at this chart here in UI, most traders would say, okay, Steve, here's how I can tell you I'm perfectly in sync. As we see right here, we have higher highs, higher lows. So I know that we're in a short-term uptrend, okay? Now, right here, at this point, all of a sudden, the uptrend stops. So referring back to that $10,000 course I took on Fibonacci support and resistance, this is major resistance right here. So we have to get through that resistance in order to presume. And in the meanwhile, look what we have here. We have a bearish engulfing pattern, and then followed by another bearish engulfing pattern. This is extremely, extremely bearish, okay? Because we have 2 negative candlestick patterns. You took that $5,000 candlestick course or bought that $5,000 system that's supposed to tell you exactly what the candles are saying. And on top of that, you are making lower highs and lower lows, trading analysis 101. So after all of this, after all the money, time, and effort you've put into trying to figure out what markets do and what charts do, your analysis is that you're in sync because the market wants to go lower. So this is how you give yourself this false sense of security, thinking, well, I'm in sync with the market. Look at all the studying I've done. Look at how I can analyze this, all of this analyzation, and I can be in sync with whatever market I'm looking at. So you're so proud of yourself, you even say, you know what? I'm going to sell. Because those 2 bearish engulfing patterns and lower highs, lower lows, I feel really confident we're going down. I'm going to make new lows. So you sell, and then this happens, right? This is what happens to most traders. This is why most traders fall into that 80 percentile group, because they're out of sync. You're basing your analysis on faulty assumptions, on conventional wisdom that really shows no levels of consistency. And in my mind, it's so complicated, I don't know how anyone can make a decision. Here's the funny thing. I used to use these same things in order to analyze the market years ago, because I was taught the exact same things, that they were supposed to work tremendously, that they were supposed to really help you be in sync with the market. And this is how you became a successful trader. So I know firsthand what this is all about. Well, being consistently out of sync with the market is at the root of all your losses. This is really the theme of today. Now think of it. If you buy and it goes lower, whatever you buy, whatever time frame, whatever market, really what the market is saying is that you're out of sync with it. You think it's going to go up, but it really wants to go down. And conversely, if you sell thinking that it's topped out, it's overbought, it's hit some resistance, and it continues to go higher, it's not that the market's wrong, it's that you're out of sync with the market. You say it's going to do one thing and it doesn't. So that's what is at the root of all your losses. It's no more complicated than that. It's not because of interest rates. It's not because of some, faulty system that you purchase and it doesn't work anymore. It's not because of some rumors that are happening online and people are taking the stock up or not. This is what traders do. We always try to look for an excuse to play the blame game so that we can blame someone else for our losses. But the first thing my mentors taught me is you have to take responsibility for your losses as well as your profits. And when you have a series of losses, the reason is you're out of sync with the market. Now, here's the good news in today's educational presentation. What if I told you that there was a tool designed to automatically put you in sync with the market? I'm sure you'd say there's no way. I mean, what's the catch? I got to spend $10,000 to find out what this is, right? It's some algorithm that I've never heard of that there's no way I can figure it out, and then you're going to charge me 10 grand, right? Well, in all actuality, there is already this tool, and guess what? You have access to it. It's most likely right in front of you. Most of you probably don't even know how to use it or be using it incorrectly. Well, that's what we're going to be talking about today, so that by the end of this presentation, you'll be able to use this tool and increase your odds for consistency. You can hopefully leave that 80 percentile and hopefully join the 5 percentile, where you'll be able to be consistently generating profits. Why? Because you're in sync with the market for the very first time. And the great news is that everything is easily accessible on the PTS charting platform. This is the platform I developed with Pro Trader Strategies to make trading simple and to put you in sync with the market. So welcome to this educational presentation. My name is Steven Primo, president and founder of Specialist Trading. I've been trading now for 44 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. A specialist is someone who made markets in roughly about 50 or 60 stocks. If you ever Google those old pictures of the trading floor back in the 40s and 50s and 60s, the guys yelling and screaming with lots of paper on the floor, those were all floor traders, and the ones behind those large wooden podiums were the specialists, because they specialized in making a market. If you wanted to buy or sell something, you literally had to walk up to the specialist who specialized in making a market. So I did that for roughly 9 years. I traded and was a specialist and made markets in the crash of 1987 and the bull market that followed. So I've traded and seen just about everything and anything you can imagine, all right? Anything you're probably trading right now that's a brand new system, a brand new technique, it's been around before, trust me, it's just been rebranded and renamed. So I developed specialist trading with Pro Trader Strategies with one goal in mind, that was simply to educate traders so that ultimately you can make your own trading decisions. So if you're a student of mine, I see we have some students of mine in today's class, or if you're new to my webinars or my teaching, you'll see our devotion to really trying to educate you. All of our webinars try to teach you something because we really want to educate you. There's enough profits for everyone to go around. So why wouldn't I want to educate you to hopefully elevate your trading? Okay, and you'll see that attention to detail in today's class. Now, before we begin, as always, we're required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, once again, if you'd like to get more education on a daily basis, here's our Twitter handle. Feel free to follow us. I post different information on a daily basis, bits of financial wisdom, as well as signals that our strategies have generated and explanations as to why they were generated. So lots of great free education copy down our handle right there and follow us on Twitter. Now, remember, we are different from other webinars you may have attended in that our only goal is to educate you. We're not going to tell you what we think the market's going to do. Did it top out? Is it bottoming? Is it going to go straight up? We're not going to tell you what the perfect stock is to buy or what the perfect time frame. Remember, our job as educators is to teach you how to make your own decisions. Think of any hobby or any endeavor or any craft, something you want to learn. Imagine you wanted to learn how to play golf, okay? And you hired a golf coach. All right, that golf coach would teach you everything he's learned, everything they've done in the past, things that can help you with your swing, with you playing golf. But ultimately, you have to play the game of golf. That trainer, he or she cannot play for you. You have to take what you've learned, work, practice on your own, and then play. It's the same way with trading, but ultimately we think that, well, I'm supposed to go to a website where some guy tells me what to do. No, you have to learn, and then you have to decide what you want to buy, what you want to sell, where you want to enter, where you want to exit, where you want to place your stop. Now, we teach you all of these things on our courses, but ultimately it's up to you to make your trading decisions. Why? Because a good mentor does not trade for you. A good mentor teaches you how to trade so that you can ultimately make your own trading decisions. That really is the secret to consistency, making your own trading decisions. I've been trading for 44 years now, going on 45. And the only traders I know who are still trading as long as I have been, make their own trading decisions. None of these traders watch TV to find out what the gurus are saying. None of them follow fundamental news. None of them follow what the economic reports are coming out, the jobless claims. They have a plan that works over and over again, that is very consistent, that they know every once in a while we'll have losses. That's okay. But they have a two-step forward, one-step back approach. That's what I want to instill in you. The same things that have sustained me, hopefully they'll be able to sustain you. That's what we call the specialist edge. Now, before we begin, this is a classroom today. So I ask that you please disable all your cameras and microphones. This is not your normal Zoom meeting where we all interact with each other and talk and say things and show our cameras. No, this is a static PowerPoint presentation. This is a webinar. So you can ask me questions at the very end, though. I like to take the questions at the end. So please, if you have a question, please wait till the end. I promise I'll get to them. Now, if you're having technical issues or you can't see or hear me clearly, don't worry. Each and every one of you will get a link to this recording. We're recording this so you can watch it at your own leisure. But the main thing is, remember, since we're new to this platform, we just started this last month, please disable all of your cameras and microphones, and then we'll take questions at the very end, okay? All right, with that stated, let's begin today's educational presentation. Remember, I started out by asking you and telling you actually if there was a tool that was designed to automatically put you in sync with the market. And we answered that and said, yes, there is. And you have access to it right now. That tool is what we call the buy-sell line. Now, before you think it's something that you have to go out and purchase or have to put together on your own and there's some magic formula that you have to decipher, no. You have access to it right now on any platform you're using. Even if you don't have a platform, it's available for free online, and it's called the 50-period simple moving average. That's all it is. It's an average of the last 50 data points taken off the closing price of the bar. It doesn't matter if you apply this to a 5-minute chart, the way I usually trade it intraday. It doesn't matter if you apply it to a weekly or monthly chart. It doesn't matter if you apply this to Bitcoin, to currency pairs, to futures, to stocks. It makes no difference. But you must always have a 50-period simple moving average applied and plotted on your chart at all times. And the reason is, in order to use this properly, you have to ask yourself this question before you pull the trigger, before you buy or sell anything. I don't care what strategy or system you're using, but always ask yourself before you buy or sell, where is price in relation to the buy-sell line? I always tell my new students that they should copy this down and copy it on a Post-it and tag it right next to their screen there so they can see it all the time, because this is extremely important. Ask yourself, where is price in relation to the buy-sell line? Because you'll only come up with two possible scenarios. Firstly, if price is above, say you get a buy signal, and if price is above, well then good, you will only have a buyer's bias, and it's okay to take that buy signal. But conversely, if price is below, then you should only have a seller's bias, and you should either be out of the market entirely or looking to go short, to sell. See, the trouble is most traders, once again, myself included, we're taught the opposite. We're taught to see things come down real low and get tremendously oversold, right? It's a stock, the future, the market has never gone this low before, this quickly. You've got to buy it, right? But most of the time when that happens, it is below the buy-sell line. And that's why it doesn't work out that well. It's the same thing when something goes up tremendously, goes straight up, and you say, wow, this is overbought. You've got to get out of this. There's no way it can keep going higher. Well, if it's below the buy-sell line, well, you're right. That would be a great sell. But most of the time, it's above the buy-sell line. And so we sell, like we showed you in that other example earlier, and it just keeps going higher and higher. In fact, let's look at an example here. Let's look at the buy-sell line process, how simple it is. Here's that chart we looked at earlier. Remember our trading 101 analysis. The market's going lower, right? It's hit some resistance, some Fibonacci resistance, lower highs, lower lows, two bearish engulfing patterns. I've got to sell this, right? That's the trading 101. But what's the first thing we do before any of that takes place? You can always use that later. What's the first thing we do? Well, on our platform, we make it simple. Remember, this went straight up, right? How could we have avoided that? On our platform, go to the far left-hand corner, buy sell line. Click it on. And remember, this is the 50-period simple moving average. You can do this on any platform, but we made it simple. It's right there. We have 4 different ways to view it. Let's view the simplest, which is the 50-period simple moving average. Click it on, and now we see it here appear. Now we ask ourselves, before we would have sold, where is price in relation to the buy-sell line? Well, we wanted to sell right here. Where was price in relation to it? It was above. Remember, if price is above, we'll only have a buyer's bias. So that means we're not going to sell at all. And so we would have not had a losing trade at all. You see, that's how you get out of that 80 percentile of always failing. Now, one important thing to remember, this is not a strategy. It's not a trading system. Just because price is above or below does not say, well, I guess I've got to buy it here. I guess I've got to sell it. It doesn't tell you to buy or sell. It just tells you which bias or which perspective you should have. It tells you what side of the market you should be on. Now, remember, you can trade one of my strategies. You can trade one of your own. You can trade something you purchased from another so-called educator. Doesn't matter. But if you apply it and use the buy-sell line, I truly feel you will increase your odds for consistency tremendously. Here's another example, BINS, okay? Once again, most traders, myself included, I'm not taking myself out of this game here because I did this exact same thing 40 years ago. I would look at a chart like this and say, well, you know, this is major support. This is where the institutions are all buying, okay? And look how it's just kind of held there. So this is a really good buying opportunity. It's not going any lower. The market is strong. The stock is telling me it wants to go higher. So I jump in and buy right here towards the lows because I figure, what can I lose? It's right at the support. That's major, major institutional support. After all, they've got all the money, right? They're never wrong. Well, what happened? Okay. What happened to all that support? What happened to all that buying power of the institutions? Remember, before you pull the trigger, before you do anything, always apply the buy-sell line. If you had done this on our platform, you would have known well in advance that we were below the 50-period moving average weeks ago. So why would you buy here? And look what happened. You would have saved yourself because you would have asked yourself the question, where is price in relation to the buy-sell line? And you would have seen, well, price is below. I want to buy it, but it's below. So you would not have bought it. You would have saved yourself a lot of money. Okay. Now, is this correct 100% of the time? No, nothing is correct 100% of the time. Nothing in life, nothing in the markets. What we're trying to do is just increase your odds for consistency. That's all we're trying to do. We're not going to promise you that this works because just like the slot machines in Vegas, I always use this metaphor. They are the worst out of all the odds of playing anything in Las Vegas. They are literally designed for you to lose. But what they do is they will give you a winner every once in a while. Why? To keep you there, to give you that false sense of security that you're doing well. So every once in a while, you'll get a winner and you'll feel all proud about yourself and stay there because they know that ultimately you're going to give it all back and probably some more. It's the same thing with buying below the 50-period moving average and selling above. Every once in a while, you'll get a great winner and you'll feel really proud of yourself and you'll say, why am I listening to that Steve Primo guy? This stuff works great. I mean, gosh, I would have missed this great trade. But I'm telling you, over time, if you continue to do that, you will most likely have nothing to show for it, because just like the slot machines, you will give it all back, and most likely some more as well. Now, here's a rule of thumb. Look for at least 3 to 5 bars to close either above or below the buy-sell line before an overall trend is established. In other words, if price has been below the buy-sell line for months, and then all of a sudden 1 bar closes above, that's not your green light to say, okay, well, all settings are great now to go long, right? No, you need at least 3 to 5 bars closing either above or below to confirm that the trend has changed, that the overall trend is either going up or the overall trend is going down, okay? So look for that overall rule of thumb. As we look here in this older chart of big, we see here that we were above the 50 and then we started to cross over, all right? And what do we have here? 1, 2, 3, 4, 5 closes below. So that's enough for us to say, you know what, we better get out. And look what happened. Drop 15 points. Now it starts to rise and come all the way back up to the buy-sell line, but it's having a little bit of trouble here. We have 1 close above, but then 2 back below. So this is not enough for us to say, well, we better start looking for buy signals. But then as we go further in time, we see that, wait a minute, 1, 2, 3, 4, 5 closes above. So if we're short, this is a sign to cover. Or if we're not even doing anything, this is a sign just to tell us that the overall trend is up, that we should only be viewing this from a buyer's perspective. And look what happened. The stock jumped 20 points in 1 month. So you could have potentially taken advantage of 15 points to the downside and potentially taken advantage of 20 points to the upside. This is how you leave that 80th percentile of losers and start to get into becoming a more consistent trader. Another example here in Merck, an older chart just for educational purposes only. Now, this is where we say nothing works 100% of the time, but it can still help you. Let's say you were long Merck and you had bought right here somewhere on this 5 bars closing above. And initially it went up, but now it's coming right back down and it's really not doing anything. In fact, you're losing some money, okay? Look at the clues that the market is giving you. Even though it's oscillating above and below the 50, how many closes do we have below here? We have a total of 9. So where most traders would say, hey, Steve, this is good support. Look at the support right here. It's really holding. If you're a student of mine, you would say, there's no support here. The market is not only telling me, it's screaming that it wants to go lower. It's just giving me a chance to get out. Because look what ultimately happened. The stock fell 8 points in 1 week. See, once again, this is why most traders fail, is because you're putting your trust in faulty analysis, either conventional wisdom of the way you're supposed to be trading candlesticks, listening to the earnings reports, listening to some guy in a chat room or a trading room. I used to do these same things and they didn't work for me at all. So it wasn't until my mentors taught me these very simple approaches to trading that I started to become consistent. And that's what I'm trying to instill in all of you as well. Now, if you're still not convinced of the importance of the buy-sell line, let me show you some more charts here. Let's start looking at how this can be applied to indices or to ETFs that represent the market. Here's a chart of the Dow Jones Industrial, okay? As you can see, we've been going up here, and now we start to falter, but we're just kind of holding. Nothing's really wrong, right? Well, I want you to look down here. Look at the date. This is October 1987. I was on the trading floor some 34 years ago, trading right around this time. Now, let's apply the buy-sell line. And look what the buy-sell line is telling us. Even though it has not generated a strong case to the downside yet, look at what it's telling us. It's oscillating below and then back up above. These are warning signs. We have about 3 closes below, and then 1, 2, 3 closes back above. But then we have numerous closes below, and then a couple of closes above, followed by 2 more below, followed by 3 above, followed by 3 more below. So if anything, once you learn how to apply this tool, you should be saying, listen, the market is showing me signs of indecision with a lot more closes on the downside. Until I get about 5 closes above, I think I'll exit the market. Or if you're a more aggressive trader, you say, you know what, I think I may go short. And that would have been a wise decision, because look what happened. The crash of 87 would be comparable to a one-day market drop of 5,000 points today. Now, a lot of people think that, well, this is the crash, right? Actually, no, the crash is this one day. This is comparable to 5,000 down points in one day. Look at how much time you had to go leading into that, about another 5,000 points. So after you had 1, 2, 3, 4, 5, you had plenty of time to get out of the market and bypass all of this downward movement. Okay, this was 34 years ago. Let's look at another chart here. Let's look at the spiders. That's the ETF that represents the S&P 500. Okay, SPY. Here's a weekly chart, just to show you how this can be applied to any market, any time frame. Kind of doing the same thing. We're above, but now we start to show a little indecision here. Guess what? As we look down at the date, this is January 2008. Does that ring a bell to anyone? What the markets did in 2008? Here's the funny thing. This was well before 2008. This was the last month or two of 2007 on a weekly time frame. What do we have here? 1, 2, 3 closes below, followed by 1, 2 closes above, 1 close below, 1 close above, and then 3 more closes below. So obviously there are more closes below. Even though this is not a slam dunk decision of 5 closing bars, there's still a lot of indecision here. And the market's basically telling us it doesn't really feel that strong anymore. So let's say at this point, in 2008, roughly 13 years ago, you knew this principle. You could have said to yourself, you know what, I don't feel comfortable about this in my long-term portfolio. I may want to exit some stocks, or maybe I'll just exit a portion of them, or maybe I'll get out of everything, or maybe I'll just raise my stop. So if it does start to falter, I'll get out and at least have some profit. And all those would have been great decisions, because we all know what happened after that. We went into a 2 or 3 year bear market. That was the beginning of the 2008 financial crisis, okay? Now, a couple of years ago, looking at the spiders on a daily basis, we did the same scenario right here. This was in 2018. We had 3 closes below. Remember, the rule of thumb is 3 to 5 closes. I personally like to look for 5, closer to 5 closes, but had you only looked at 3 closes below, that could have warned you of a 400 or 4,600 point drop in just 3 months. This was in the Dow, okay? So go back now and research your last 10 to 20 trades. I really don't care what you trade, and I really don't care what strategy or system you use. It doesn't really matter to me. But I can almost guarantee you that your losses were due to the fact that you were out of sync with the buy-sell line. In fact, I can really almost guarantee it, because this is the way most traders fail. You are buying below the buy-sell line and selling above. I know you're going to find some really nice winning trades that way. I told you that will happen. But like the slot machines in Las Vegas, they're designed to make you feel confident. But if you continue to trade that way, after a series of trades, you'll most likely say, wow, what happened to all my profit I made in that one trade? Okay, because it's not consistent. We look for things at specialist trading that are consistent, that will give you a 2 step forward, 1 step back approach. We know you will have losses from time to time. That's okay. That's like someone playing baseball. Even the best baseball players, the best hitters, strike out. But it's what they do over time that matters. It's their consistency that make them the greats. And that's the same process with trading. It's a consistent approach. It's not about worrying if you had a loss. It's about 2 steps forward, 1 step back. Now, here's what I want to do, something a little bit different. I want to toggle over onto the PTS Primo charting platform. This is where we're going to show you some actual up-to-date charts that happened coming up into this last week, just to show you how powerful this process is, okay? I'm just going to look at a few charts, but I want to show you how simple it is on our platform. Now, if you bear with me, I'm going to have a new share here. And what I'd like to do, if you could please just let me know if you see this okay. Just go to your chat box. Once again, we're new to Zoom, and if I tried to do this a couple of weeks ago and it didn't come through. So I just want to make sure if you can see ISRG chart in front of you, just type in yes or no, okay? Because this is going to be really important. I just want to make sure. Great, I'm already getting yeses. Thank you so much. I did it correctly. All right, let's look at this chart here. All right, as we're looking at it, we can see that, okay, we're kind of going down, then we're going back up. All right, so maybe we would say here that, all right, so we're basically in a range, down, back up again. but who knows if it's going to go back down. So maybe that chat room you went to said, hey, listen, you have a doji right here. This is a morning star pattern. This is pretty negative. I would say short this, or maybe buy some puts or some type of spread strategy with a downward bias. Okay, so that's your scenario. You want to go short here for a quick little move to the downside. Maybe it's going to come down here and fill this gap. Maybe it'll come down here and test this low. Okay, there's a morning star pattern right there. So you say to yourself, okay, I'll buy some puts, whatever. Now the price, we realize this is an expensive stock, $765, but let's just use this for information purposes only. So your analysis is go short, take a little shot here to the downside. All right, we don't care. Once again, whatever strategy, whatever method you want to use, we don't care. But before you make your decision, come to the top left-hand corner, our buy sell line, click on, and here you have the drop-down menu. Now, here's the simplest way to use the 50-period moving average, right? But what I want to share with you is probably our most popular way, and this is called the fluid buy-sell line. This is the same thing. You're using the 50-period moving average, but everything below is colored red, and everything above is colored blue. So this makes it a lot simpler with that visual aspect of seeing whether you should have a buyer's perspective or a seller's perspective. And automatically, you know you should have a buyer's because you have the blue background. Okay. Now, how many closes above do we have here? 1, 2, 3, 4, 5. So should we be selling based off this morning star pattern here? Should we be selling at all? Absolutely not. All right. Let's go forward in time because this happened in April. Let's go forward in time and see how well that would have worked. Well, most likely you would have lost a lot of money, right? Oh, wow, you would have really lost a lot of money. And look how this continues to be positive as we go forward in time. Now here, we've basically gone sideways. This is where most traders would say, well, Steve, we're going sideways here. Look at this. So most likely the trend has run out of steam and we're going to go lower. Well, look what happened. We came all the way back to roughly where the buy sell line was and started to go up again. So any sell-offs while you're in the blue buy zone should not be looked at as selling opportunities. They should be looked upon as buying opportunities. So as we go forward into June and into July, look how price continues to go higher and higher. Even though you have sell-offs here, it immediately recoups itself. We have another sell-off right here in the beginning of August. Look what happened. In just a few weeks, we're making higher highs, all right? Now, this will take us all up into this past week, which is right here. Price is roughly at 1,030, okay? Remember, you wanted to short it at 750 based on that great candlestick pattern. How well would that have done? Now, the last 2 days have gone down sharply. Should we sell this and get out? Well, it's up to you, but according to the buy-sell line, it's telling you that we're still in an overall uptrend. So this may be a buying opportunity. It remains to be seen, but we don't just want to buy something because it has the blue background. Remember, you have to add structure, but we're not talking about that today. We're just talking about being in sync with the market. If your strategy, whatever it's based on, said that's a buy signal, well, then go ahead and take it. Let's look at another one here. SAM, this is the Boston Beer Company, all right? Once again, someone could say, wow, okay, we've gone up, but look at what we're doing here. We're coming straight down. So this is most likely a really good buying opportunity. Look at this, another doji here. Looks like a bullish engulfing pattern. Looks like we're breaking that downtrend pretty soon. I'm going to go long this. Okay, this is the way most traders trade. Obviously, it's too oversold, and that guy in the trading room says you got to buy this. It's really a good buy. It's very inexpensive. It's $1,125, but according to their analysis, it's going to go up to $2,000. Okay, what's the first thing? We don't care what strategy you're using. It doesn't make any difference to us at this point, but you should apply the buy-sell line. All right, let's apply the fluid buy-sell line once again. It automatically tells you what side of the market you should be on. So ask yourself, where is price in relation to the buy-sell line? It's obviously below. It's simple to see because you have the fluid buy-sell line. And how many closes? 1, 2, 3, 4, 5. So once again, I don't care what somebody says in a chat room. I don't care what some guy says on TV, some so-called trading guru. I don't care what that $10,000 course is you took that told you to buy because of this candlestick pattern. If you are below the 50-period moving average, your odds for success are greatly diminished. Remember, we just want to increase your odds for consistency. So let's follow this. This was in May, all right? And remember, you were at roughly 1,125 was the price. Well, so far it hasn't gone up at all. It's kind of just wavering sideways to down a little bit lower. But as we can see, it starts to slowly go lower, okay? Now, as we kind of compact the chart a little bit more, we'll see here that in June, it has these bounces. Every time it bounced, this is where traders think, well, we've bottomed out. But those are selling opportunities. Another bounce right here, another selling opportunity. And look what happened. Some news or something came out right here. How good would it have been to go long and then taking advantage of this bounce, okay? So as we can see, we're now right here. Ultimately, that buy signal from that so-called trading guru was at 11.25. Where is price right now? Well, it's lost like over half its value. It's at 5.42. Do you see how simple this process is, but how it can greatly increase your odds for success? Let's look at some stocks that have really been prominent in the last couple of days. Lulu gapped up really big and then started to go lower. All right, what's the buy-sell line say? Here's a phenomenon you'll see a lot of times. You'll see price come right down to that level and then bounce. All right, so we had 1, 2, 3, 4, nearly 5. Now, if you're more aggressive, you could have said, well, there were 3 closes, Steve. You're right. But remember, that just tells you what bias to have. It doesn't tell you to sell at the market. This is not a strategy. It just says that you should be looking at Lulu from a seller's perspective. So let's say you're waiting for your strategy, whatever it is, to give you a sell signal, and you're still waiting, and then this happens, okay? So you just have to be very careful. And as well, you need, I would say, closer to 5, especially in the beginning using this process. Let's look at another example here. Let's look at Peloton and the use, okay? Had a really big bounce yesterday, remember? Everyone was saying, gosh, you got to buy this, it's bottomed out. Well, it may have bottomed out. But once we apply the fluid buy-sell line, we see here that all it's done is come up to the fluid buy-sell line. It's still, for all intents and purposes, in an overall downtrend. Right here, we went above it and then started lower. So this still remains to be seen. If anyone was asking me, I'd say the market, not me, the market is still telling me that this should be viewed upon from a seller's perspective, not a buyer's perspective, okay? Now, let's take a few seconds to look at some ETFs that represent the market, such as the spiders, okay? SPY. Now, as we look at this right here, this is going back all the way to March. You see how we touch it and we bounce off, we touch it, we bounce off, touch it, bounce off, touch it, bounce. This happens over and over again. Now, right now, after the last 2 days of the market, they've been very negative, but we're still in the blue buy zone. This should still be considered a buying opportunity. This takes in the entire S&P 500. It's the ETF that represents that. So for all intents and purposes, the market is still okay according to the buy-sell line. Does that mean it's guaranteed it's going to be okay? No, because next week, for all we know, we could have 5 closes below. So you have to wait and see. Now, here's something that may be of interest to you. As we look at the diamonds right here, that's the ETF that represents the Dow Jones 100. I mean, Dow Jones 30, I should say. Look at this. We actually already have 2 closes below. Now, this is only representative of 30 stocks, but still, this is a clue that you may want to take into consideration. As you can see here, we had 1 close below and then immediately bounced up. Now here we have 2 closes below. Are we going to bounce up next week? Well, no one knows. But this is how you learn to listen to the market. To see here how simple this is, how you get a better grasp of what the market or whatever stock or future you're looking at, or currency pair or Bitcoin. And if you notice, I didn't mention interest rates. I didn't mention support and resistance. I didn't mention moving averages. I didn't mention anything about institutions. I didn't mention anything about some trading room. You can do this on your own. In fact, we encourage you to do this on your own. This is how you will become a consistent trader, learning how to listen to the markets for the very first time in your life. We're all taught as beginning traders to listen to some guy in a chat room or to listen to some earnings or economic report, but we're never taught these simple things on how to listen to the market. Well, that's my goal as an educator, to teach you how to do this so that you can become a consistent trader. There is more than enough for everyone to go around. There's no way, I only want to be stingy with sharing with you this information. There's more than profits on an infinite basis every day to go around. So why wouldn't I want to share this with you? This is extremely simple, but very, very powerful, okay? And you can start using this once again right away. Okay, let's go back to the presentation. Let me see if I can get back there right. Here we are again. Hopefully I've done this correctly once again. What I want to do is recap what we talked about. Remember, we just show you some information here, but remember, we can in no way guarantee that any of the results I share with you will be repeated in the future. So let's recap before we go into the question and answer portion, all right? Remember, always apply the buy-sell line. It's the 50-period moving average. That's all it is. But we have different ways to see it. A lot of times it really helps students really understand better because of the color coding behind it. But you can start using this. Let's say you have another platform, you have MetaStock, TradeStation. Let's say you're using your broker's platform, online platform. That's fine. Just apply a 50-period moving average. And once you've plotted it with whatever you're trading, whatever time frame, ask yourself, where is price in relation to the buy-sell line? It doesn't matter whatever strategy you want to trade with. I really don't care. But ask yourself, where is price? Because it will greatly increase your odds for consistency. Remember, the theme of today, being consistently out of sync with the market is at the root of all your losses. It's not your strategy. It's not some $10,000 system you purchased. It's not the institutions. It's not what the earnings were. It's just being out of sync. It's that simple. And the buy-sell line is the best tool I know of to get you in sync with the overall trend, okay? I've often stated this before. If I were stranded on a desert island and only had one tool to use to trade with, it would be the buy-sell line. That's how powerful it is. So as we close up, we have a great attendee discount for you, taking time out of your morning this morning on a Saturday. We're going to offer you our bootcamp course, okay? This is our trend trading special. It really goes into different ways, a lot more detailed, a lot more intensive on how to find the trend and how to trade with the trend. We cover a lot of things in this course, but here's the good news about this special we're offering you today. Whereas the bootcamp course just deals with trading in the trend with whatever method, whatever strategy you have. A lot of our students say, well, Steve, that's great, but I'm new to trading. I don't have a strategy. Or a lot of students will say, well, Steve, my strategy sucks. It's terrible. It doesn't work at all. Well, we're also going to throw in strategy number one, all right? This is a great pullback method. It's one of our most consistent methods. We're going to give you all the entries, all the exits, all the stops. We're going to teach you how to trade it aggressively as well as conservatively. It uses a unique indicator called the Dodging channels, and it has a proprietary setting and way to apply it. Let me share with you what it is. It's a pullback method. If you're not really, in the know of what a pullback method is, a pullback method likes to buy at lower levels within the trend. So where most traders would say this and say, well, Steve, this is a downtrend. I'm not going to buy this, right? You always say to be in sync. Well, strategy number one determined that the overall trend was up, and this is a buying opportunity. So where everyone else thought to sell, it actually generated a buy signal right here, and look what happened. The ETF went up 8 points, which represented roughly 700 Dow Jones points, okay? But we're going to also throw in some extra bonuses. In fact, a total of 12 trend trading bonuses, okay? I'll go through these really quickly. We'll go through these. You'll also get our entry scores, exits, stop placement course, a buy-sell line scanner. You can scan for stocks above or below. Top bottom strength scanner, numerous things to click on for click-on entries and stops. But here's the best thing, bonus number 12, okay? This is the PTS Primo charting platform. We're going to throw in 6 months of our platform. Remember, you saw everything today was taken from using our platform. Now, 6 months will normally cost you close to $900. We're throwing in 6 months absolutely free. This comes with your strategy number one course. It comes also with the trend trading course, the bootcamp course. And here's just a few of the dozens of things offered on the PTS Primo charting platform. Remember, this was designed by me and Pro Trader Strategies, where we take things that I've used and accumulated from my years of trading on the trading floor. These are things you won't find on any other platform, like the buy-sell line features, the 4 different features, the proprietary exit levels, 1 click away. Top bottom 25% tool. This is a way to determine the short-term trend. A strength of trend tool, a tool I developed with Pro Trader Strategies to find out if a trend has run out of steam or not, or still has some momentum left in it. And this all comes with personalized tech support. These are just a few of the things that are offered on the platform that you'll get free for 6 months, along with all the other bonuses, along with the strategies, as well as the trend trading course. So let's break this down. Our Saturday morning discount. Now, normally, if you purchased all of these things separately, it would cost you over $8,400, okay? Don't worry, we're not going to charge you anywhere close to that. In fact, we're going to drastically discount this down to $297. You're going to save over $8,100, but that's for a limited time only, most likely for today. I think Pro Trader Strategies may extend it up to Monday, but after that, it goes back up to $8,400. This is a great way to get your trading back on track. You're getting over 4 decades of information, of things, tips, strategies that I've accumulated right there for less than $300. Along with that comes a 6 months free use of our platform. A year from today, you will have wished you became a member of these courses. Don't waste time, invest in yourself. Start trading in the right direction for a really extremely low price. Less than $300, I can almost assume that most of you have lost more than that this month if you're having difficulty, okay? $300 will really get your trading back on track. Here's how to take advantage of this, okay? Contact Pro Trader Strategies. They're my sister site. They are the ones that I help me develop the platform, and they're in charge of all the pricing and discounts. Now, you can contact them at that email address right there, or you can call them directly. If you'd like to sign up, you can call them directly right now at 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to answer any question you may have or take your order over the phone. Now, that link you see right here at the very bottom is the link that will take you to the info page, as well as the sign-up page if you'd like to do that online, but it's not a live link. You'd have to copy and paste that onto your browser. So if you'd like, just go to your chat box. We've just posted a live link right there. All you have to do is click that on, and it will automatically take you there. You don't have to post anything, okay? Now I'm going to leave this information up here. We have about 10 minutes left. If you have any questions concerning what I taught you today about the buy-sell line or anything else, just go to the chat box, type in your questions, and I will answer them to the best of my ability. All right. But remember, if you're interested in signing up for that deal, I would highly suggest just calling Pro Trader Strategies right now. They can take your order over the phone, and you can be up and running and have everything today and start studying and getting your trading back on track. Okay. Okay. Someone is saying, can this work intraday? Yes. I basically am an intraday trader. My trading on the floor had me trading in and out of stocks for roughly every couple of minutes. So that's my background. I like to really trade intradays. I trade the E-mini futures, totally different market. Well, I apply all of these same principles, all of these same concepts to the E-mini futures on tick charts, 5-minute charts. And so it works well for me, and I still use them in my own personal trading. So yes, that's a long way to answer. Yes, it does. Okay. Someone is asking about educational. Okay, this is our most common question we get. On the promo, it says you get educational correspondence. That means each and every one of you will get a link to or not get a link, you will get my personal email address. And so you'll be able to email me whenever you like. So if you have a question concerning the bootcamp trend trading course or strategy number 1, let's say you're not really understanding the rules, even though they are very simple, or you just want me to check your work, that's fine. You can email me whenever you'd like. I was answering emails this morning prior to today's presentation, and you can contact me, and I will answer them. Remember, if you go to a lot of websites, they always say, oh yeah, well, we have educational correspondence. You can always email us, but most of the time, what you're doing when you subscribe to them or you purchase a $10,000 course, what you're doing is you're emailing an intern or an assistant, and they're answering your questions. We don't do that here at Specialist Trading and Pro Trader Strategies. Every email goes directly to me, and I only answer them, okay? Now, if there is a question concerning tech support, well, that will go to Pro Trader Strategies. Let's say you have trouble loading a chart, or maybe you can't watch a video properly on your screen. That's tech support issue, and yes, they will answer that. But anything concerning trading, anything concerning the strategies, how to implement them and how to approach them, comes directly to me, and only I will answer them. So it's like having your own personal mentor, okay? Okay, any more questions? I guess most of you are already calling Pro Trader Strategies, ordering your your trend trader package. Well, I would highly suggest, if you're really interested in this, do this quickly. I know a lot of students, what they'll say is, well, I'm going to get the video, let me watch it again, and then I'll make a decision. And so they'll watch the video and they'll say, well, I don't really need this. And then 2 weeks later, after they've had a series of losses, they'll contact Pro Trader Strategies and say, hey, you know what? I guess I will take that $297 offer. And most likely it'll be gone. Remember, this is only for a short period of time. This is an $8,400 special that we're reducing down to $297. So go ahead, feel free to watch the video. But if you're really serious about it, make the decision over the weekend, and most likely no later than Monday, okay? Okay, as we close up now, I want you just to take one last look at our disclaimer, and I hope you learned something today. I hope you can go and apply it to your own trading. In fact, as I said, go back and look at your last 10 to 20 trades. I can almost guarantee you that the reason you lost money, the reason you had losers, is because you were out of sync with this simple concept today, okay? So hopefully you learned something today, but most especially, I look forward to all of you becoming students of mine in the bootcamp course, as well as strategy number 1, okay? Thank you so much for attending. Have a great weekend, and I'll see you next time. Bye-bye.